Hi, I'm Natalie from Kaikata Estates, and I'm here today with Jon Stockdale from Jigsaw Mortgages. He has decades of experience in mortgages and finance and a wealth of experience that we can draw on during the interesting times we find ourselves in, and how we can use this time to prepare for a mortgage or a house move when the lockdown ends, which hopefully will be sooner rather than later. Hello, Jon.
Hiya.
So the first question I wanted to ask was, the news is full of stories that there are no new mortgages available at the moment. Is that the case?
Not quite. There are reduced amount, but that's simply because lenders have furloughed a lot of staff, and most of the staff that are working on the mortgage payment holiday things for people. So they've got very few staff working on new mortgages, so they're taking a bit longer, but there are still products out there. And I'd also add that I and a lot of the press seem to think that one of the first things, once we do come out of lockdown, one of the first things that will kickstart the economy will be the mortgage market. So you can expect to see estate agents and banks, etc., being the first ones to open their doors and moving us forward again.
Mm-hmm. Yeah, I mean, that certainly fits with me. The property market got off to a fantastic start at the beginning of the year, and I'm still getting calls from people who are desperate to get inside and view properties, which obviously we can't at the moment. But I think with lockdown, there are a lot of families that are now planning on buying perhaps larger homes. So we're expecting there to be quite a strong summer and autumn as and when lockdown finishes. And I think the other interesting thing at the minute is that my understanding is that lending is at an all-time low. So how can we leverage that at the moment, given that we're in lockdown?
Well, what we can, we will come out of it, and the government having pumped so much money into getting us through lockdown, I think the chances of them suddenly turning the tap off are pretty low. Couple of things to mention: a lot of the money that the government have pumped in has been in the form of short-term loans to businesses, etc. So that will be paid back. So they may not consider that to be too much of a problem. I think they'll put money into the economy, and what people need to do is start now with getting themselves organised and ready for when they do want to move. Now's the best time to start. Things are fairly quiet. You can get a copy of your credit report, start from there.
Okay, so what, in terms of getting yourself ready, what are the things that people should be doing now to best prepare themselves for applying for a mortgage?
Well, the first thing I ask for people for is a copy of their credit report. I think if that's what I'd recommend people do. Get a copy of your credit report. The two main reports that lenders use are either from Equifax or Experian. They charge a monthly fee. There are companies out there that do it for free, but they're the two biggest ones. But get a copy of your report now and see what's on there. Make sure there's nothing on there that shouldn't be on there. Make sure your credit score and credit is as high as it can be, and your report is as good as it can be. Mm-hmm. And then just keep an eye on it regularly on that basis. I'm not suggesting you look every day, but perhaps every month to start with, and then every quarter. Things to remember are that if you've got any problems on your credit file, things will stay on your credit file for 6 years. So you want to do everything you can to keep things off there. That's not to say you can't do anything for 6 years, because there are lenders that will look at the situation. If you've got a hiccup on your, such as a default on your credit file, the lenders will look at it after 2, maybe 3 years. But obviously, anything you can do to keep any bad things off there are good. Have a look at the amount of loans and credit cards you've got. One big thing lenders are very big on is what they call an appetite for debt. So if you've got lots of credit cards, even though you may not be using them at the moment, if you've got lots of credit cards, then lenders may consider that an appetite for debt and refuse you a mortgage because of that, because you could, in theory, go to them for a large mortgage and then run those credit cards up.
Right, okay. So I remember before you mentioning some things on credit reports to be careful of that I hadn't even considered actually. And one of them you said is you can end up with markers against you even when you haven't done anything wrong.
Somebody. I mean, it's not the loan companies, credit card companies. They're not perfect. We all make mistakes. I have known companies put things on people's credit files when they're wrong. So the quicker you can pick up on that, the quicker you can rectify it. If they have made a mistake, then they must rectify it, and they should rectify it.
Mm-hmm.
And it can be done, but you need to tell them. They won't obviously know there's anything wrong until you tell them. That's why you should check your own credit file regularly.
Right, okay. And I think the other one that I was always aware of as well is when you see things that you can buy for interest-free credit over a period of 2 or 3 years, which financially may well make sense to pay that off at an interest-free loan or interest-free rate over a few years, but that has an impact on lending, doesn't it?
While it is good that it is interest-free, it is still borrowing. It is still credit. So that would fall under the appetite for credit again. So whilst I've heard of people taking out multiple interest-free credit cards, putting the money in a bank to earn a little bit of interest, with interest rates so low, they're not going to make much out of it. And it just, again, it will show this appetite for debt thing. Lenders will be concerned that you might run up cards that aren't. Later you get used to it, you start running up debts on cards that aren't interest free, then it gets really expensive.
Mm-hmm. Okay, and how about at the moment a lot of people are furloughed at 80% salary. Is that going to have an impact on what they can borrow?
Once at the moment you would lenders are asking people if they had been furloughed, so they're not very keen on. Well, again, they've got plenty of staff furloughed as well, so they know what the situation is. They're not keen on lending at the moment to people that have been furloughed. But once we come out of lockdown, then things will change. But
Mm-hmm.
if to remortgage while you're under furlough, you can simply stay with your current lender. That's not an issue. So if you're looking to buy, it is an issue while you're in furlough. If you're remortgaging, then you can stay with the current lender and just pick one of their new products.
Right. Okay. The other thing I wanted to look at actually, because this I've seen a lot of with online calculators for mortgages. At the moment, I have a client's investment property that I'm selling. It's on the market at 350,000, and it's attracting a lot of first-time buyers. And the phone's ringing constantly with people who are desperate to view it. I do always ask if they have funding in place. But what I've found, certainly there's a lady who wanted to offer on it, and she'd looked at an online calculator that had told her she could borrow enough to buy this house. But when she actually went to a broker for an agreement in principle, she was £100,000 short. So, and I certainly for first-time buyers, I know mortgages can be a bit of a minefield, and the things they may well look at are online calculators and or to go to their bank. How can people best get an idea of what they can really borrow before they start looking at properties?
Online calculators, like all IT, have a place, but only as a very rough guide. If you tried 20 different lenders and told them your incomes and your outgoings, you'd get 20 very different maximum loan amounts. So it depends on whether you're employed or self-employed, whether you're on the construction industry scheme. Each lender has specialised areas that they work in. So a broker will be able to tell you, for example, if you're a CIS worker, Halifax are very good for that. A simple income calculator can't do that. But also the income calculator, every lender's income calculator is different. Their IT people will put their own algorithms in there that will tell them the loan amount. So you just need to know that some lenders will do 4 times income, some will do 5. it depends who that income calculator has got their information from. They may have got it from the best, they may have got it from the worst.
Mm-hmm.
You know, income multiple wise. And also you need to look at your pay slips. There's lots of things on your pay slips that lenders will take into account.
Okay, so sorry,
I was
carry
going to
on.
say it's not a minefield. I wouldn't want to put people off and say it's a minefield, but it's an area that you want specialised knowledge in, really, to know where to go.
Mm-hmm. Okay.
And banks, one bank can only advise clients on their own products. So if you go into a Barclays, they can only sell you Barclays products.
Right. Okay. Yeah, it makes sense. So I think if somebody wanted to, because I know you look at whole of market.
Yes.
So you've got access to thousands of products. And I should say, actually, I have personal experience of working with John. He secured a mortgage for me years ago, which is how we first met. It was right out the back of the recession, and I was a contractor, so they were all no-nos. And I banged with Santander, and they weren't even prepared to have a conversation with me about a mortgage. And luckily stumbled across John, who found me a mortgage at a good rate, and I still get regular phone calls from John reminding me that your mortgage is up and I can get you a better deal. So I don't even have to diarise it. He does that for me, which is wonderful. But for anybody who's looking for a new mortgage or even as first-time buyers, what information should they prepare to talk to you?
Well, get your last 3 pay slips handy, or if you're self-employed, your last 2 years self-assessment forms, last 3 months bank statements, any details of any loans or credit cards. If you've already got a mortgage, how much it is, who it with, how long it's over. We'll fill in what we call a fact find. That basically says what it does, what it says on the tin, finds out all the facts we'll need to know. And the only things I'm going to want to know are facts that a mortgage lender is going to ask. Mm-hmm. So it's a case of what's your income, what's your outgoings, what do you want? A bit like I tell people, it's a bit like financial ready, steady cook. Give me all the ingredients, and I'll try and cook you up a nice meal.
Okay. Are there any other tips you've got for people at the moment who are considering changing mortgage, moving house, first-time buyers?
Well, I always tell people, see if you can build up an emergency fund. That's key, because that does 2 things. Number one, it shows that you can save. It trains you to save. It gives you an emergency fund so that if anything happens in the house or in your personal life, if you've managed to save some money, then you won't need to dip into your savings. So it might save the odd blip in your credit file. And a big one, keep your current bank account in credit. Again, lenders will look at that. I've known lenders turn people down because they've always been getting close to their overdraft limit.
Right. Okay.
That's a big thing. And talk to people. Find out, even if you're not going to do anything now, doesn't stop you ringing me and saying, I want to do this. What can I do? If you're thinking of moving in a year, 2 years, start the process now. It's be prepared. What I don't want people to do is to be like Kafka and suddenly think, when you see lots of Cheyenne and Arapaho Indians as you come over the hill, saying, "Oh, I wasn't expecting that." You shouldn't come across any nasty surprises like that. So get yourself ready. The earlier the better. There's no time, as they say, there's no time like the present. And we can work on that. Even if there is a blip, then you've got time to sort it out. Mm-hmm. You'll know what to do.
Okay. Thank you, John. That was really, really useful. There are some more top tips, because we did an interview a little while ago, and those top tips are available on my website, www.kaicarterestates.com. So there's more information there if you'd like to read up more. And after this segment, John's contact details will be coming up. So if you'd like to call and speak to him about your own circumstances and start preparing yourself for a mortgage, then please do feel free to contact him directly. Hey, thank you very much for your time, John.
You're welcome. You're welcome. I'll go back to the gardening now. Thanks.
Thanks. Bye-bye.
Bye.